Mitul.
Thank you, Keshava. Thank you. Welcome everyone. Good to see the participation. I'll quickly just uh, take half a minute on introducing everyone. So Varun, Sada, and I are part of ConstellationBlu, heading different segments. So transaction advisory, virtual CFO services, restructuring, etc. Sachit is CFO at Dataweave and has been kind enough to join us on this discussion. The idea of this discussion, we've had, a lot of, I'm sure a lot of you have attended webinars talking about impact of COVID, how deep in trouble we are in some cases, etc. But idea of this webinar was that, what next, right? The thought is that now that things will gradually open up, we need to plan for that as well. Yes, there is a recession that we have all, hit and are going through currently, and all of us together have to come out of it. So the discussions today were, are meant to be around that, and we'll definitely welcome all the question and answers. To start with, I think from a flow perspective, we've just, had a few areas identified that, we would want everyone to talk about, and specific questions, if any, please drop them on the Q&A section, and we can take them from there. So just quickly diving into, the session straight away. Probably you can start with Sada. So Sada works with a lot of companies as their virtual CFOs or, handling their finance teams. So Sada, the one thing that I think everyone is trying to do currently is cost optimization, right? So are there any, given the kind of companies that we have on this discussion today, any few key things that you think would be common and relevant for them to kind of look at on the cost optimization front?
Yeah, thanks, Mitul. Thank you, NSRCEL, for this opportunity. Hope everyone is staying safe and healthy. Quickly, Mitul, currently, I mean, historically, business are looking at mostly medium and long-term view. Currently, we have to look at short-term as well. It's very important to have the short-term sustainability for each business and each company. So all these businesses who are kind of chasing the scale over a period of time, accumulated a lot of overhead and discretionary spend. It's the time to look at each line of each cost line item and see how we can optimize, etc. And for a lot of the early stage companies, I would recommend 3-4 things that they should look at, and there are a couple of things I would like to highlight as well. The first one is the salary cost. If you are typically in the early stage, you are a small founding team plus founders, and maybe a small team around sales, marketing, or maybe operations, etc. There is very little that you could do. So recommend saying that if you can defer their salaries or give more variable pay or even give ESOPs as a long-term bonus, etc. If you're already planning to give some ESOP, you could give it a little more extra. So rather than letting off, because you would have hired them as a founding team, you would have hired the good quality people. Letting go is also impact the business. So to retain them, you could look at kind of giving a variable outcome-based salary structure. This is one area that the early stage look at it. The second one is the technology subscription. This is based on our experiences. Most of the technology solution companies are in the product development stage, you subscribe to a lot of tools and software, and typically these are all subscribed online, and you would give your either founder gives their credit card or a company credit card, etc. And most of these are on an auto payment. And during normal scenario, you would overlook some of these things. It's the time to look at this and whether you really need those subscriptions. You would have subscribed for a building or developing a particular module in your product or app. Probably might not, that usability is not there right now. Can you discontinue those? So look at those technology subscriptions, which is kind of an auto pay, which really you would have ignored in the normal scenario. The third cost item I would look at is the data hosting plus another kind of another cloud related cost. See, a lot of these the big players are offering credits. So the early stage companies or even late stage companies should look at get the benefit of this in getting additional credit. Even then, there are optimization ways where you could look at moves from the if you have 4 different servers, one for prod, pre-prod, kind of like QC, etc. Either you could move one of those like QC into or testing into a low cost service provider, right? So or you could move into another service provider where we could get additional credits, etc. That's a third one, and fourth one is marketing cost or sales and marketing cost. I would put it that way. So if you're like digitally acquiring customers, there are multiple channels, you would spend or make an investment. It makes a lot of sense to look at each funnel and try to optimize. Maybe not to invest in few of these channels where you might be acquiring customers but there is no revenue coming in. So rather than just acquiring the users and getting a lot more traffic, look at those spends where you could do revenue acquisition. So these are the four different areas where very early stage companies can look at it. At a growth stage, or large companies can have multiple cost line items. They can look at it. For example, they could optimize on the office rent cost, where you could current scenarios and everybody is talking about like they split this workforce into like certain percentage work from office and on a on like interchange basis, and then you could also negotiate terms with your vendors, suppliers, and etc. But keeping just in mind, mostly in early stage, these the 3-4 things that comes to my mind right now.
Sure. So, Sada, one interesting point that you touched upon, specifically on technology and tools. So we've seen, a lot of companies coming out with supplementary products in their existing products that are kind of helping facilitate, a lot of things in the current times. Do you see, is it worth evaluating some of those, from a people replacement perspective or cost optimization perspective? Are you familiar with any of those kind of tools? And anything that you've come across?
Sure, Mitul. So, I mean, we always all benefited through technology and the tools, etc. Especially talking to on the finance department or function. If you're a company where you have volume and transaction volumes, you could automate how we can automate or integrate those the transaction accounting into an accounting software. There are tools out there where you could automatically reconcile your payment gateways, etc. Rather than historically there is a manual accounting into an accounting software. So you could explore some of those options. It provides a three-way reconciliation. There is no errors or if there is a delay in the receiving the payment from the payment gateways, and it could be easily identified, etc. So definitely companies should look at adopting some of these the technology tools and when doing this the transaction level especially when it comes to the finance team or an accounting team.
Got it. Makes sense. And so just from a since we were talking about cost optimization, and since this is a lot related to finance, what would you say in current circumstances are you seeing as an ideal runway that a company should maintain? Any thoughts around that?
So I mean extend as much as possible, right? That's everybody is talking about. That's a one mantra, but so I mean there is no one solution for everybody. The funding scenario has been slowed down. Everybody is talking about cost optimize, and then increase the revenue, and then how you sell your products, how relevant you are to the customers, etc. Typically, you should look at for at least 15 to 18 months runway, because the Q1 is already a wash. Q2 there are lockdowns open, but it's still a lot of uncertainty. So 18 months would definitely gives every company to get to one full cycle in 1 year at least, how they can provide services and products into the customers. So I would recommend at least 15 to 18 months.
Sure. No, makes sense. I think it's tough to predict when everyone will be out of this fully. Hopefully things should partially open up by mid this year, financial year, and things get better. But yes, I think 18 months or so kind of makes sense. But we've had this one constant debate and discussion with a lot of founders and finance people that if they've been recently funded, let's say December funding, Jan funding, whatever it is, and they're kind of decently placed on a cash flow perspective. Should they also look at cost optimization at this point in time, or should things go on as just kind of normal for them? I mean, no change, because they would anyways have 18 to 24 months of runway typically.
Yeah, I mean, it would be prudent to analyze I would recommend 3-4 points on how or kind of the quadrant they can put it across. Even though they have this an 18 to 24 months runway based on the plan that they submitted to the investors, it's important for them to assess the business and the sector they are in, right? Is it in headwind or in a tailwind sector? Just to name in a few headwinds is where it could be, is it a real estate, real prop tech sector, or it could be hospitality sector, or a travel sector. It's something you're building in those sectors, or you're in mostly in online education and healthcare sector, etc. So you should assess which sector you are in, who are what kind of services and products you are providing. That's one. Second is relevance with customer. That's very important, right? If your customers are paying for your product and services, there is no reason why you should slow down. You should make the right investments. Adding all the must-have features to your product and product offerings, you should make those investments. And third thing is the look at all your the marketing channels that you are in, right? If you are especially the sales and marketing, you should look at how you can kind of the optimize your distribution channels, those things. And fourth point is an adaptability. If the scenario changes, if the economy come back to normalcy, how quick can adopt the growth scale, right? How we can quickly change. And if you are kind of reduce your burn, even though you have a runway, can you quickly within only few weeks or few quarters, can you kind of start getting back to the scale? That's something that's quite important.
Sure. So I'll probably just pull in Sachit here. Probably a good time to pull him in. There are a couple of other things that I'll get back to on Sada. But Sachit,